All right. Thank you all for joining us. My name is 𝐂𝐓. We're going to be bringing to you a presentation and a panel of 3 of the top agents in the Emerald Coast area, Northwest Florida. And we're going to be talking about the Emerald Coast, real estate, investing, and what it's like to be in real estate, especially in this environment. And the most important thing that you need to know about real estate is that it's a long-term game, and rates and prices are high right now. The biggest question I get asked is, well, if I buy today, what if home prices crash tomorrow? Data comes into that, trends go into that. But part of the purpose of this is to be able to outline who is winning in this environment, who's active in this environment. And we're talking about the Emerald Coast. This is a hidden gem that most of the country do not know about. We're talking about a landscape of short-term rental properties, beach properties from Destin down to Panama City. And we're going to be highlighting tr.ee, and we're talking about multiple millions of dollar properties being sold. We said, what, $18 million, Rosemary Beach, same range in Alice Beach. So quick intro. I've got Blake Jones with Scenic Sotheby's, Rachel Worrell with EXP, and Kyle Miller with Engel & Volker. So Blake, thanks so much for joining us. I'm going to just kick this off. So working 100 hours a week over how many years in the business? Since 2014?
16.
Okay. And you and I were talking about relationships being so important in this job. And we're talking about people buying in this area from Nashville, Chicago, St. Louis, Atlanta, all over the Midwest, some places maybe in New York or the West Coast. But this destination lifestyle, why are people right now buying in this environment?
I think in a lot of instances, it's a lifestyle type purchase. And so it just depends on what's going on in that individual's life. Like, for instance, I've got a guy coming in 2 weeks, and we're going to be looking at $18 million homes, but he just sold a very large business. And so even though we're in, what feels like a slowing market and things that aren't moving as fast as we've gotten used to, still a lot of people who want nice things and are done well and have the resources to do so. And in a lot of instances, there's still a lot of people with liquidity events that need to deploy capital, right? And so that can be a funny concept for some to feel like there's not enough stuff out there for me to buy. But right now is a good time to be a buyer because sellers are going to listen more than they ever have. And so if you're long-term in your capital, there's still a lot of good stuff to get.
Okay. So you mentioned they're looking for a property in the 18 million range. What specific nook or cranny, what area are they looking in?
So that would just be pure Gulf front homes.
Okay.
Okay. That'll span from Inlet Beach to Grayton. Okay.
And so Gulf front homes, like what are the sizes of some of these homes?
So they can range from 3,500. There are very famous people with Gulf fronts for sale right now. Like Luke Bryan's got a house for sale in Seagrove, and that's 4,000 square feet, or they can go up to 9,000 square feet.
Okay. And so this being a big short-term rental area, becoming the craze from COVID, to Rachel. So what's one of the most difficult transactions that you had to go through in the last couple of years?
Gosh, thank you. Do you have all day? Different transactions have different hurdles. I've had some where there's title issues where, I've had to figure that out, where the person who owned the mortgage, whenever the seller refinanced, whoever did the deed didn't file the satisfaction of mortgage. So come to find out the guy had passed away, but wound up after trying to chase a dead guy around, I was able to track down the title documents from 2006, and we were able to close on that property. It just, there's so many things that happen day to day, low appraisals, repairs, whatever. But at the end of the day, we're just doing what we can do to help it be as smooth a transaction as possible and help everyone be successful, the buyer and the seller.
What percentage of purchases in the last, say, 12 to 24 months are cash?
A lot of them. And I would say the people that are out buying right now are cash and 1031. So, you spoke about the 1030, or you spoke during your cost segregation, the 1031s. I do work with a lot of 1031 buyers, or my sellers have to 1031. So they're on a deadline and we're looking for a property of like kind. So that's been a lot of my business lately.
All right, Kyle. So,
Thanks for having me.
No, absolutely. So, working with Engel and Volkers, a lot of guys that are, and women, that are active investors. What's it like having that investor background and also serving your clients in this environment?
I think it's useful in the sense that you can help educate them. They might know the investor market in St. Louis, but they don't really necessarily know the investor market in or around tr.ee, right? And so you can help educate them about, one of the biggest questions I get is, hey, what does it cost to manage my property? Well, it's kind of a loaded question because it's a fee-based and it's negotiable, right? Anywhere from 20 to 22%, or I've seen some go as low as 18% if you sign long-term contracts. And then really kind of explaining, hey, there's other costs associated with this. Insurance, you're still paying the utilities versus, long-term rental, you're not going to be paying the utilities. And so you have to have a really good idea of what that cost to own looks like. That way, you can project your cash flow. And then also people ask about appreciation, and you can also pair them with a good tax attorney too, to help them do some of these things with cost segregation and, learn about depreciation and how it can help them and their family achieve financial success.
Yeah, thanks for bringing up the cost segregation piece of that, right? That's a big part of the tax planning purpose strategies. And if you've got a high income earner who's making money and they want to be able to shelter or have a way to be able to legally, minimize their tax liabilities, real estate's a big option, a big tool that can be utilized to do that. And then I kind of want to open this up to the idea of, okay, if I'm in New York or if I'm in, say, Detroit or Chicago, and I've got this life event, this panel uses the word liquidity event multiple times in our speaking, and you've got cash that you want to deploy. Why this area versus, say, Naples or North Carolina, Outer Banks, or Miami? Why this area?
I'll take that question. So Florida, the past few years and really historically, has been a very investor-friendly state. We're tax-free. We don't have tax on income. We have business-friendly state. There's a lot of people moving here, migration here. There's a website, I think it's called Where Money Walks. And you can see where all of the money comes from all these different areas. And really, Florida has been a big beneficiary of that. And so people like it to park money here. I'm from Minnesota. I don't really see myself parking $8 million in Minnesota just because it's a good place. I think it's going to appreciate and go up. You want a place where people come to vacation and what's considered paradise, I think.
It's funny you mentioned that because I almost was sharing with the guys here, Brad and Dante, on the drive over, my decision to purchase in Destin a multi-million-dollar property as a short-term rental. And that's a whole journey. It took me 15 years of stacking and actions and believing that something was possible to get there. It doesn't happen overnight. And in St. Louis, there's an area called Innsbrook. It's a A-frame cabin type of feel, probably an hour out of the city. And my wife and one of her girlfriends came in town and they did a little weekend trip out there, and she came back and she's like, Joel, you should probably think about this. I mean, these things are renting like $400 a night, like in the fall. And I was like, okay, cool. So we were working with an agent and we put offers on a few of these properties in the $300,000, $400,000, $500,000 range. We're talking like a 2 or 3 bed, A-frame. And there were a couple properties, these big lakes, Lake Alpine, and I forget the other one's name. And there were a couple of these that were just sitting on the market for like $2.5 million, so like 5,000 square feet, like all the docks, all the stuff. And they're just sitting there. And we had a friend of the family that has a house down here that we stayed in. I just, for shits and giggles, I just decided to look in that neighborhood, like what was on the market. And the thoughts never crossed my mind to ever buy something over $2 million. Never crossed my mind. I was like, oh, that property in Missouri is $2.5 million. This property in Florida, similar size, access to a private beach, is actually a lower price. What the hell am I going to buy in Missouri versus buying on the beach? And that started probably a 5-month process of planning. And by, I think it was March of 2021, we bought. And, Minnesota, who's going to put $8 million?
Yeah, nobody's going to, usually the people that live in Minnesota work their whole life to move to Florida. Okay. So if that makes sense, it's a destination. It's a life event. It's people, that's where they want to end up living. Warmer climates. So, and the, no state income tax is a huge benefit as well. So hopefully that remains.
Okay. But why this area versus other areas?
I'll jump in. So the Northern Panhandle, we're serviced by a driving destination. We talked about this a little bit earlier. And so if you draw a radius of a 9-hour drive, this is the only nice white sand, low high-rise area in that whole economy. And so if you're in Nashville and you want to drive to a nice beach, or if you're in Dallas or Houston or Birmingham or where Atlanta, this is the only place to go. So we are the only stop outside of Gulf Shores. And this is the only place within that whole stretch that has a real upscale feel and a real safe environment that people can come with their kids and let them just go. And so if you're looking at Florida destinations, we've got the easiest to get there, especially in a recession when people are doing more driving for trips, or even when things do better. There are more people come here because they get easier here too. So it's a great spot from a logistics standpoint to be able to get here.
Okay. So.
And I would like to piggyback off on that. I mean, if you look at our beaches, the sand, the water compared to even places on the East Coast in Florida, I mean, they don't hold a candle to our area and the natural beauty. And there's also in the Panhandle some great places for boating as well. So it really is. You can hop in the boat, go swim with dolphins. I mean, it really is what you were saying. It's a hidden gem.
Okay, so your profile says hardest working woman in real estate. What's the tagline?
Agent
in real estate. What's that all about?
That just means I give it everything I've got every single day. I don't know if I would clock my weekly hours at 100. I'm sure I have done that for sure in the past, but that's just coming from a place of authenticity. I'm going to do whatever I can do to help people do what they want to do when they want to do it. And, with our careers, these are huge life decisions for people. And so when you have that responsibility, you're going to do whatever you can do to make sure that these people, are making good investments, are selling for the most amount of money possible. I mean, it truly, it's a lifestyle.
I bring it up in that way because I know that we talked about some of the cold calling or the calling of your network and just getting in front of people and staying in front of people. When you talk to that many people and have conversations, you're going to hear a lot of different stories and, journeys and things like that. And when you talk to somebody, right, and depending on what they're trying to sell or buy or whatever, and then they decide to buy, what comes to mind of some of the journeys of deciding after however many months, okay, now the time's ready?
Well, I speak with property owners, right? So these are people that already own properties in my market. And sometimes those conversations go, Rachel, we love it. We're happy. But then sometimes things can happen in life. Maybe someone passes away or they have a health issue or a divorce or what have you. So, but then sometimes people, have more kids and they're like, we need to have, 2 extra bedrooms. So it just depends. It's all based on whatever they want to do when they want to do it. And it's also human nature. It's kind of like you. We always want to upgrade no matter what. So it's part of life and it's fun to be able to help people accomplish what they want.
Okay. What's one of the biggest questions that a seller is asking right now?
What's my home worth?
Yeah. Amen.
No one knows.
Yeah. Very true.
Sorry.
Okay.
I also want to add to Rachel's thing about life events. I also think that I also see a lot of grandparents that want to buy an asset that they can use and have their grandkids come and spend time with them because they don't want to lose that time. Mm-hmm. That's another facet of it. And then I think on top of that, you just sprinkle a little bit of, you can, the ability to rent it when you're not there if you want to, the appreciation, the depreciation. I mean, there's so many different facets in it, but really what's really as a core is family time. And creating a place where your grandkids want to go. Like,
that's exactly what I was thinking about.
Gotta
go to grandma's house. We're going to spend some time.
Yeah. Hey, my grandparents have a place down in Rosemary Beach. We can go down for the weekend. Let's go,
Well, in that buyer journey, something I think part of the question you're asking, that buyer journey can take 2 years. And prior to COVID, it did in a lot of instances. If you've got somebody new to this market, it will take 2 years in a lot of instances to learn it well enough so that you're comfortable to put $2 million into it, or to be at the right stage of your life to have the right things fall into place to do what happens. And so like in your case, it was 15 years of hard work, but it was still how long of a time before you actually bought from when you started looking? It can take a while. It's not just like that. And so I think that's why it's good to use somebody who knows this market well and can coordinate that process appropriately for you.
Yes.
Exactly what Blake said. 1 or 2 years is really the average conversion rate for a purchase, a new lead. From the moment you meet somebody, it's usually 1 or 2 years. And constantly we hear, oh, it must be so nice you can, sell a large, high price home. But you're like, man, you don't understand. Like, we haven't done this for 2 years,
Yes.
like it takes time. And we don't sell shelter. We sell things that people buy with discretionary income.
That's right.
Yeah.
What that means is optional.
Yes.
They don't need the beach house, but they want it.
No one needs a condo.
Yeah.
Very true.
Because when you're talking about families and, creating those memories, like I was sharing with the guys, yesterday that like my kids that are 4.5 right now learn to swim in the pool that we have at this Destin house with the grandmas. And like, I'll never forget that.
They're going to remember that for the rest of their lives.
If I'm staying at one house and then a different house and a different house, like if you don't have the same memories if it's, something that you're going back to consistently.
I would ask you this too on that. Is that did you grow up that way?
No.
So what's interesting is you're going to grow them up in a way of thinking even bigger than you were taught. So there's more to it than even just the time. It's the experience. And we were talking about the drive for 25. So you can instill a way of thinking that everything is possible. You can do whatever you want, but it takes a lot of hard work.
Yeah, there's a friend of mine. Her handle is Homes and Hustles. Her name's Sierra Smith out of Tennessee. And she was telling me about how the idea of giving their kids allowance and like, they don't want to do that. If you're doing household stuff, like that's part of the job of being in this household. But when I go house sit at someone's house and watch the dogs in the house, like come with me, help me out. And it's a way to be able to earn some of the income. And like that
we do the same thing in ours. Kids get no allowance. You're part of this family. We all work hard. You're going to help us. Now, if you do something extra, well, you can get rewarded, but not for just the normal stuff.
So you've got an 8 and 11-year-old. What's an example of something that comes to mind of that they participate
Take the trash out, help with laundry, do the dishes, all that stuff.
All that stuff. All part of
everything that takes for a day-to-day that just to live and be there, you're not getting rewarded for. That's life.
Okay. Is there something that comes to mind that's extra that they were able to participate in?
So like my daughter will come help me set up on some of the bocce tournaments that we do. And so if she comes and helps, then I'll pay her for that.
Cool.
I bribe mine with good grades. So.
Oh, they get paid for good grades.
Yes.
That's their work.
Bribes and threats.
Yeah, it works. It works.
So talking about that journey of a buyer, right? Life events, liquidity events. What are some of the examples of something that you've seen that's, been a buyer in the last couple of years?
Liquidity event is an example of that. Would be a guy who sold his business. He actually purchased a business, got it back on track, and then sold it. Wanted to buy a beach house for him and his family to use. They actually don't rent it out. They just come and use it as they want. Their daughter lived here in the summer and wanted to work at the beach, and so there was an opportunity there. But really, they come from all different facets. I was just telling you, Joel, about one that a lady went through what sounded like a pretty bad divorce. And she Googled most beautiful beaches in the United States, and tr.ee came up. And so she rented a place, came down, and that house that she stayed in was for sale. We had it listed, and she called and she said, "Hey, I stayed here for a week and I want to buy it. I want a place for my family to come down here and spend. I just went through this whole thing and this is what I want."
And what price range was that in?
$8 million.
So what did you say?
In this area.
A good divorce?
Yeah. Well, I mean, that's a terrible event for family.
Right. I want to bring up that part of it too, because, kind of the journey, right? You don't build a business that's hiring millions of dollars from scratch. It happens over time. These are things that come into play over years of compounding. On the flip side, you've got buyers that, especially right now, some of the people that I'm talking to, who are looking to purchase something that they're going to rely on the rental income to basically afford the payment. And it's not always the best thing to do. Having reserves and having the ability to make payments when rental income's not coming in is really important, especially in this environment. And we've talked about some of the rental income is lower than it had been in years previous, as the effects of COVID took control in terms of the way that people were vacationing. And knowing the market, right? Working with professionals that know the ins and outs of all these different neighborhoods, from Seaside to Sea Grove to Watersound to Alice Beach and Rosemary and all of the things that are in between. If you're doing an AirDNA analysis, that's the only tool that I have access to, right? But talking to a professional like you were giving me an example of well, this one says it's going to be 100,000, but maybe in reality it's going to be different.
Maybe half, right?
So take that one example. Why would something be higher or lower than what AirDNA is projecting? Well,
here's what's interesting about our market in general is that it's our full-time population from Miramar Beach to here is only 15,000 people. But every week in the summer, we'll have 150 to 200,000 people come. So just from a population perspective, if you're a national company or a big data company or something like that, you just look at the population census data. Well, nothing in that tells you what our market does. And so, and it's very seasonal on top of that. So like an AirDNA or something that focuses on cities and metropolitan areas and things that are very much more consistent, their algorithm doesn't parlay to our market as well. Kind of similar to Zillow. If you try to just look at what your house is worth, and the CEO of Zillow sold his house for 40 grand less than what the Zillow was, right? So it's not all algorithms are created equal.
Is that a fact?
Yeah. This was 7 or 8 years ago. But so that data, just that raw data, unless you have the reports, doesn't look the same. And so an AirDNA isn't always as accurate. For instance, I had a client that was reaching out. We were working together looking for something. And she's like, hey, I found this house. It's AirDNA says it'll do 100,000. Well, it's 3 blocks from the beach and in a non-heavy rental area. And I was like, you'll be lucky to do 40, 50, And so, but because people can come with preconceived notions of what's worked in other places, maybe isn't as secure as it is here as it is there, right? So if you're looking at an investment property in Nashville or you're looking at something on the beach, we're only going to get 22 to 26 weeks of rental, whereas in Nashville you might get 50 because of all the events and things. So it's just need to know what you're looking at, make sure that data is correct.
In that example, a projection of say 100, reality maybe it's 50K. What price range would that have been at?
I want to say that was 1.2, 1.3.
Okay. Because that in the old days, the very beginning of 2020, the 1% rule. If you could buy a property for $1 million and get 100K in gross rents, you're probably doing pretty good.
That's right.
10%.
Yeah.
You're probably doing pretty good. And that also skews on where you are on this landscape from Destin to Panama City. And Destin probably going to be doing better on that scale. Miramar, you get into the heart of 30A, probably less. Anything to add on to kind of that concept?
Yeah, we call them, I don't mean to speak for everybody, but we call them the shoulder markets. So you got 30A, and then on the shoulders are Destin and Panama City. Destin and Panama City, you're going to have a much more opportunity to reach that 8 to 10% cash flow rate. Whereas 30A, you're probably looking at 6 to 8, maybe 4 to 8% in best case. And so it's a lot more people are buying 30A, not just for rental, because that's where they want to be when they're here and they're willing to pay a premium for it.
Okay.
So we get much more pure investment play on the shoulder sides. That's what I see anyways.
Yeah, I agree with Blake. Another thing that I would recommend doing too, I think you're kind of saying what resources do you use outside of AirDNA, for example, which is a national algorithm company, tech company that just generates algorithms. I would go on VRBO and Airbnb and go look at who is currently managing properties that are either next door in the same condo building, anywhere, and ask them, hey, how is this unit performing?
Pick up the phone.
And call them and say, hey,
that's the cheat code.
That's the due diligence. Yeah, instead of leaning on an algorithm, just get the real raw data. And I think the people that treat it like a business will get that return, but the people that treat it like a hobby, you're just like anything, you're not going to get anything out of it.
That's very true. You can see it, especially in condos where you've got the exact same building, same floor plan, but it's managed differently. It's managed by a different company or what have you. You can see such a huge difference. And then, with those people that are what you were saying, needing that cash flow in order to pay the bills, I always say, hey, you need to have savings because pandemics happen, hurricanes happen, life happens. So you never know, make sure you can float
Oil
it.
spills happen.
Oil spills happen.
yeah.
Yeah, exactly.
Yep.
Very true.
Insurance doubles, and mine's tripled in 3 years.
Yes.
It seems like it's finally starting to come down a little bit. So hopefully that
I just renewed mine.
Yeah.
It was in effect later in the month at half of what it was before.
Yeah.
I got a very, very happy surprise. I want to talk about the mindset of a buyer. So a life event, you sell a business, divorce, you're talking about $7-8 million to park it for a long term. What's the thought process that some of these buyers are thinking with this?
That's just one buyer, but I also think those are the buyers that trade up. Like we've seen people buy houses that are further away from the beach, rent it out 1 or 2 years, sell it. That, in and out of the markets. Blake, we were having a conversation earlier, and you were saying about the cost of going in and out of the market so high, and people who are entering the market now probably need to be a little bit more careful with their entrance, because you're going to make your money on the buy, and then try and sell. But the people buy and sell property here, what seemed like the last 10 years, like, it's crazy. People just buying and selling, trading up closer to the beach, because that is the blue chip asset, is the Gulf front. And that's the first stuff to rent out. But the mindset of a buyer, especially from somebody who is coming from a different market, is kind of like, hey, let me wrap my head around this. That's why it takes a year or two. Yep. They have to study the market. They have to know the market. Hey, this house just traded for that. Just to really have a really good understanding of it. And you need an agent to help you with that as well.
Well, things have to happen. So let's say historically it was somebody heading into retirement, and they're saying, hey, I want to buy something. I want to have it for a couple of years, and when I retire, I want to move there. Reality is that's probably the first stage of retirement, and most people are going to own a house here for, I think the average is 6 years. So it's no different than the U.S. average of how long someone owns a house. So, for them to retire, they have to plan things, and for that cash purchase or for the assets to be in the right place to close on even $1 million place is a lot of money, and it's a lot of moving parts, and it's got to be systematically planned out, and things have to fall right, or the stock has to hit to a certain point and then they hit their option or whatever it is. There's a lot of pieces at play that have to move before the piece here gets moved. And so that just takes time, because that's a lot of financial stacking, as you say, and you just got to do it. That's how you get there.
Yeah, I have a person that I know that's in their late 50s and 401k and stocks and don't have a whole lot of real estate, and they wanted to be able to get into the market, and they kept hearing about the area, and they know people in the area, and they go travel to their friend's house that's worth like $4 million and sleeps all the families and all this stuff. And, the expenses part of it, you have the management company stuff, then you also have the utilities and all the ins and outs that go into running and managing a rental like that. And, starting too big, not always the best idea. And, trying to coach and show them, if you do it this way and it works out great, that you can always scale to the next one. What would be an example of, say, an entry-level price point on 30A right now?
I mean, like Prominence, $1 million. It's a 3-bedroom townhome. You can get something there for maybe $900 to $1 million. And, you own that for several years, and you see if you love it, then you can roll out and get something more or get something less. But, let's say somebody's coming into the market and I can spend $2 million, Blake, and this is what I'm looking for. Well, we might look at it and say, well, let's try to spend 1.2. Let's keep that powder. And in 2 to 3 years, if the market goes up, great, you've won, you can sell it, get out. If the market goes down, well, now you just got more purchasing power too. So figuring out your approach into the market is super important. And again, that's why you want to talk to somebody that's going to help you figure out what's best for your situation, because just because you have $2 million doesn't mean we're in the right spot for you to spend that full $2 million.
It's a great point.
And there are some smaller condos. I mean, you can pick up a studio apartment in the heart of 30A for, well under $1 million. Is that going to perform as well as a 2-bedroom or a 3-bedroom condo? No. But if that's it's got to be 30A, if it's got to be that brand, I mean, there's definitely opportunities out there.
Because you use the word blue chip, right?
These are like Apple, Microsoft. I mean, these are these homes where we're sitting in Rosemary Beach. These are legacy homes.
Yep.
Yeah.
Very often do people ever want to sell, especially on the south side. It's a premium.
Yeah.
When you have to cross 30A, there's a premium to that.
So if you go down the bend, this gorgeous cobblestone road to this forum or gateway to the water there, the last couple of houses, I think when I looked on Zillow, for saying Zillow again.
It's a good barometer. It'll tell you the direction the wind's blowing.
Yeah. I mean, I think I saw like $19 million on the left side, $16 million on the right side, and just like the scenery, just like amazing. I mean, breathtaking. And, I did a workshop a couple months back, and I think it was November, and brought some people in from around the Midwest and just had an amazing time. This place that they'd never even heard of or seen before, and they just walked away. Oh my God, we're coming back. That was the reaction. So $19 million, $16 million, Rosemary Beach. So you used the word earlier, planned community. Can you talk a little bit about the blue chip stock, the planned communities? So what does it all mean for people that don't know the area?
Yeah. So, I mean, St. Joe is kind of the mastermind behind quite a few of these. You have Watercolor, Water Sound. There's even a planned community on the north end where a lot of locals live called Water Sound Origins. They're the masterminds behind that. Seaside is the first new urbanism community in the United States, where the idea is you can park your car and you don't have to get in it for a week. You can walk to everything. So that was really, really cool to see. And then they've taken that model and they've copied it along 30A. And so you've got Alice Beach, which is another one, which is owned by, managed, I guess, by the 𝐂𝐓𝐇, which is a paper company, I think in Alabama. Is that correct? Or is it Steel company? Okay. St. Joe Paper Company. Yeah, a lot of
billion-dollar company.
Yeah, a lot
they
of
do a
paper
lot of
and
things.
steel and a lot of stuff going on. But that was another planned community that a family had a vision for. I think they were walking down the beach in the 70s or 80s and bought it on an auction.
Well, and to kind of tag in on the blue chip, that family, when '09 happened and the whole financial debacle and property values went to zero, they just stopped selling. They're like, we're good. We'll just wait.
They're going to hold.
Right. So that staying power allows you a lot of strength and what calibrates the blue chip status of a lot of these places. A lot of these areas like Rosemary have a lot of staying power, even if things get really bad.
Okay.
Because their time horizon's so long.
Yeah.
They have a long-term time horizon. When they buy it, they know they're going to pass it down to generations. There's a few. The Retreat was one of the first St. Joe developed communities. That's a great community. I think also too, like that's a non-rental community, which not that we're going to talk about that a whole lot, but there has become a little bit of a premium there as this place has become known. We've got some of the locals that are like kind of flocking to that, which is an interesting facet as well. It wasn't a premium before. It's kind of like now it's like a fixed commodity. There's not so much of it.
Well, one thing that when you were talking about buyers, one thing that I have been preparing my buyers for is with 30A specifically, we've been having a lot of controversy regarding public beach access and customary use. So one of the things that I make sure that I consult my buyers on is you need to make sure that you're purchasing in someplace like Rosemary or a community that has deeded Gulf access. Because if you're buying on the west end of 30A, that is something that you have to be careful of. So, going on with what you were saying with blue chip, right? You want to make sure you have that deeded Gulf access if you're buying in this community.
So what would be an example of either verbiage on a listing or something to be looking out for that would be a bad sign for not the right access?
It needs to say deeded Gulf access.
It's so sparse. There's not really a trick. That's what makes it so hard, I think. And I think the simplest way to answer is that there isn't some easy navigable path that you can just know or find. You have to know these streets. You have to know these markets. You have to have been in and out of these transactions and had people that have won and lost and seen it and been beat up to know, oh, wait, that street, no, that's a tough access because those two owners beside the access are both not very nice and they put up signs no allow anyone on them. But there are some owners right beside a beach access that could do that don't, right? And so there's no simple path. That's what makes it such hard to talk about and makes it hard for anyone to really know or wrap their arms around the whole issue all to begin with. Even the county, just to enforce it, private property rights are very tough to work for the sheriff.
And from the landscape of what's here, right, there's a lot of national forested parked area. And I think you used the number of 50 or 60%. What was the number that you guys were talking about?
Yeah, it says yes, between 40 and 60% of all the land south of 98 in the Smile of 30A is national park.
It's a huge asset to this area because
Right.
we technically live on an island and there's these state parks that take up a lot of that space. You've got Topsail State Park. You've got Deer Lake, Grayton Beach State Park. You got Point Washington, Camp Helen. I mean, we're literally surrounded.
But on that note, if you have kids, right, you got to change diapers, or, if you have to lug your cooler and all of your baby gear to, which I've been there. Okay. Sometimes it's more convenient to stay in a place where you don't necessarily have to do all of that and go to the Gulf.
Yep.
Fun fact on that too is that it's a scenic corridor, that whole chalice. So the reason you don't see any high rises is, early on in the 80s, Rashkov and all those put it designated as a scenic corridor, which doesn't allow you to build above 55 feet tall as a countywide standard anywhere south of 98. And so lots of protocols have to be put in place so that you can't. So that's why you don't see the density. So when you're driving down, you see forest. You don't just see tall buildings, and it keeps that ornate feeling.
And so, Destin, you for sure see that, right? So where's the cutoff?
Well, at Walton County, the entrance to 30A. So
okay, so
Miramar. Yeah.
And it's well, even Bay County, they have those restrictions. But then when you go to the city of Panama City Beach, that's where you see the high rises. So when you get in the city limits of those, that's where you'll start to see the high rises.
Okay. Back to supply and demand and prices and long-term thinking. So do you have this protected land that no one's going to build on? So if you're buying property here, there's only so much of it, right?
It's Manhattan rules.
Okay. Exactly. Okay. They don't make any more of the sand.
That's right. So the people that are buying, especially that are close to the water, they're buying it for 20, 30, 40 years type of time frame, right?
Yeah.
Long-term time horizon real estate always.
Okay.
And then you said this legacy property.
Yeah, it's a legacy home. I mean, you have a liquidity event in your life. You sell your company for $100 million and you want to go park 20 of it at the beach. I mean, that's kind of a large chunk of your net worth. 20% of your net worth to having a house. That's probably a bad example, but you want to have a place for your family to be able to gather Thanksgiving, holidays, where your grandkids want to come hang out and spend time with you, and you can watch them grow. There's so many different facets of it. One thing I wanted to also touch on was a house I just sold in Point Washington. Now, this is somebody who got really innovative. 2 years ago, they bought a house. They actually didn't buy it from me, but we knew each other, and he's an agent in Nashville, and he kind of was handling the transaction himself, and his lender kind of fell through, and I saved the deal with another lender. So then a couple years later, he hired me to sell the house because he was so happy with that service. But they were doing like $80,000 a year gross rental, and they kind of found a niche market in Point Washington. They were managing it themselves. They were just north of Grayton Beach, and people loved it because they could come there. They could, probably pay a little bit less. But once they were at home at night, and then their family was all there, and their kids couldn't go on 30A and get in trouble in like Seaside or something like that, right? So I thought that was really interesting and such an entrepreneurial mindset where they were adding value, but something that's not very common in this area. Is a short-term rental north of 98.
Interesting.
Yeah.
Because Grayton is one of the places you can drive your car up.
Well, if you have a permit. Only 150 permits of the lottery are given a year, but there are some grandfathered permits.
Okay, so if you're just renting a short-term rental, you can't just drive up there.
No, you can go to Grayton's actually done a really good job with doing a shuttle service from a large parking lot to Grayton Beach. It's definitely one of the hot spots now. It wasn't very popular too many years ago, but it's definitely become really cool now.
Any other kind of entrepreneurial examples like that where someone finding value out of thin air?
Blake.
I think adding square footage in planning communities like Rosemary, especially if you can add square footage cheaper than what it retails for.
Have you seen somebody go through that process personally?
I have.
Okay, dealing with the county, the process.
It's usually the county doesn't. I mean, it's usually going through the design board of the community versus the county in like a Rosemary Beach, because there are things like certain balconies can't be facing a road or that type of thing. There's a review design process.
So in that example, what type of square footage do they add onto what?
Not much. Like removing a balcony, adding 500 square feet for $400 a square foot, and retails for $1,500. There's a spread there. Not that that's like a whole thing you can add, resell a house on and make money, but I think it's a value add proposition. If you see the potential, especially in some of these older homes. I say old, but Rosemary Beach was founded in 1995. Some of the homes are kind of deteriorated now, and there's, room for renovation.
One of the things that we did start to see, especially 2020 when people were buying up everything and we had no inventory, people were, buying these old ugly houses for $1 million, tearing them down and then building $4 or $5 million houses on them. So now the opportunity for that right now is not possible, but we did see a lot of that happen post-pandemic.
Yeah. And the limited amount of land, right? The opportunities to create value. And, this panel all have their feet in the waters of real estate investing personally. And I want to kind of dig into that real quick. So Kyle and Blake, I know you guys have both done construction stuff in different combinations of facets. So you're selling right now a number of townhomes that your team has built from scratch. How fast have things changed since when you planned to build versus right now?
Well, so like when you start with a development, you have a pro forma, and you get married to that pro forma. You have a sales price and a cost price in that. You want to make as much in between those two prices as you can. And over time, they get closer and closer and closer together. So like we purchased the dirt in 2020, and we're just now getting to furnish them, and we'll start renting them. But yeah, it was, like we were chatting earlier, a market is still moving, but not at all like it was. And it stops on a dime, and without symbol, without signal, and without anyone knowing, it just changes. We go from multiple offers on everything you look at to, wait, now we can go look at homes again? When getting locked down, this area was a big safe haven for people that did not like getting locked down.
No, very true. I mean, it's kind of a mental health thing. People just needed the outdoors. They needed to, feel free. And that's when we had so many people from New York, California, that they hadn't even discovered us at that point. And then here we are. And we kind of almost don't have a slow season anymore.
No, there's still California plates in my drop-off line when I drop my kids off at school every day.
Wow.
Yes.
Wow. That's crazy.
So, we're sitting here at the Sowa House, right? Kind of going back to the entrepreneurial spirit as well. As agents, we were talking earlier today about this being, a high concentration of entrepreneurs. So tell me more about that in this area, what it's like to be an entrepreneur in this area.
It's tough to get started. Sometimes you've got 2 houses or 2 jobs.
Yeah. That's true. It's much harder to move here today than when I moved here.
Yeah, exactly. Like when I first moved here, it was like my mother-in-law was like, Kyle, like I was still dating my wife at the time. My wife, I was still dating her. We're pretty young, but she said, Kyle, you have to move here. You can just put 30 on anything and you'll make millions. I was like, oh, maybe, I don't know. There's nothing here. There's like one place to get gas in Santa Rosa Beach. Now there's like 2 gas stations and golf cart places all over. There's golf cart rentals is kind of a thing that's kind of just came out of nowhere, I feel like.
Yeah.
Beach chairs, these
It's still a learning market. The market's still figuring out what it is here. Like our identity is, no one really knows, because for the longest time, the only people that could afford stuff were people who were retiring. And now we've got this onslaught of young people who have moved, which we didn't have back before 2008 happened, before our last kind of downturn or whatever. I'm not saying there's a downturn coming, but we now have like this vibrant young community that we've never had. And we've got this full-time population that we've never really had either. So that entrepreneur mindset is kind of a newer thing. And it's interesting because who knows where it's going to go or how it's going to play out, but it's a lot of fun to be a part of.
Property management's a big company, a big business that people have started. Other businesses I think that could be started too, or like asset management, where you're overlooking people's houses when they're not here, because you're going to go buy a $10 million house and you're going to be here maybe 1 month out of the year. The rest of the time it's just sitting. If you're not renting it out, who's looking over that? That type of thing. So there's lots of ways to twist and turn it. A lot of restaurant owners.
Yeah, I just had a client. He's owned several restaurants in Nashville, voted best in Nashville, and he came over here, bought a second home, and then 3 months later he was like, Rachel, I want to start a French restaurant here. And I said, okay. So by a miracle, I got him a place to open it. 3 months later, he had it open. But
Oh,
those
damn.
are the
That's
type
amazing.
of
What's it
people that are
called?
moving. It's Renaissance French restaurant. You got to go check it out.
Okay.
But they're from Paris, so true Parisian French cuisine. But those are the types of people that are attracted to this area, I think.
Call them leapers. Like you got to leap to move here because nobody's working into a good job just when they get here, right?
Yeah.
So
Leap of faith.
you got to leap because you're leaving something that's probably pretty comfortable. And so, I mean, just to end up here, you kind of have to have that trigger pulling mentality a little bit, risk taking and open to new experiences.
What's also cool too is it's kind of a melting pot for that.
Yes.
And you get a lot of the same minded people that show up in one area, and then beautiful things happen.
Yeah, because there's the funny fact is nobody's from here.
Right.
Like
Yeah.
the first town in this area was in the 80s. So we're on our first generation at best to even have been raised here.
Mm-hmm.
That's maybe. So
Arkansas, Minnesota.
I'm actually from Pensacola, so I'm kind of I'm a Northwest Florida girl. But it's true though that 30A is such a melting pot, and you get all of this, the entrepreneurial minds and all of this the way I think this place inspires people, in all different facets.
It's the creativity.
Yes.
It is, like, for example, that people in Point Washington where, they looked into it and you're like, yeah, you can short-term rent here. And no one was really doing it at the time. And they're like, well, we'll try it. It's a second home. It's not a terribly expensive home. Let's, manage it and do it ourselves. And they actually had great success with it.
So Rachel, how long have you been an agent?
So this is my 6th year.
And you purchased or acquired a piece of commercial office space?
Yes. So I bought my own office recently, 2 years ago, I guess. Yeah.
Okay. Is that something you ever dreamed about doing when you were a kid?
No. and that's one of the things I love being in this business, because I actually do learn from my clients. I mean, you're working with the best of the best. And I've had the opportunity to learn from some really brilliant people who happen to be my clients. So I get to kind of learn on the job.
Is there something that was said or a conversation that told you, oh, maybe I can do that, or why you should do it?
Yeah, absolutely. Just coming from the background that I come from, it's just not having, a lot of money growing up at all. So generational wealth. And it's like what Blake was saying, the standards that you set for your children, having a beach home, like that's, everybody wants to do better and put their family on a better path.
On the flip side,
Mm-hmm.
so there's a quote or some video talking about, pain, struggle creates winning or opportunities for new growth, and comfortability, creates the opposite effect. And then, after 3 generations, maybe you get back to the same point. That's another conversation about, okay, if I or you or whoever, went through a bunch of stuff that pushed you out of your comfort zone to get to this level, all the hard work, all the hours you put in, sometimes if you're not going through pain, it's hard to push that next level. And so even if you want to try to instill these things into your kids, they may not have that same type of thing happen to get them there. And it's just interesting, evolution of things.
That's one thing I think that makes this place special, is that because it is kind of a newer community, you do get those first generation entrepreneurs, those people that have worked hard their whole life and have made it these. So I think the opportunity to work with people like that do have that mindset is here versus in other markets.
So you're not going back to Pensacola?
Oh, no, Pensacola is always my home. But no, I love living and working here. I say this all the time. I'm living the dream, selling the dream. I mean, it is an amazing place to live and work.
It's kind of a life hack to leave your hometown, I think.
True.
Everyone that I
What do you
know
mean?
that's super successful here has left their hometown, typically at a young age.
Leave the past behind.
Well, not the
you're
past. Not that
forced.
it was bad, but just being forced, like getting uncomfortable, like you just said.
Yeah.
And
not relying on what's already there.
Not relying on
Having
what's
to
on
go
there.
build.
Yeah, you look back and your friends from high school or college or something like that. You go back and you're like, yeah, y'all are still doing the same thing. Okay,
Yeah.
that's cool.
Yep.
You're like, I just took a PJ up to Washington.
yeah. Somehow I got out of there. I don't know. It was, thanks to my wife. I mean, it's crazy, but yeah.
to take that leap, right? Sometimes you're forced, sometimes like I know in my journey, we were talking about some land stuff that I've been kind of going through the last couple of years.
Or you can just be dumb like me. Just leave a good thing and go.
We were talking and
Just because?
like
Yeah.
like you did it for your kids though, right?
Yeah. Well, I mean, yeah, there's some actual thought out stuff, but no, it
Yeah.
left a super good thing just to go try something to be better.
Yeah.
It's 2 questions. What's the worst that could happen and will it matter in 10 years?
Bingo.
Okay.
I was taught that as a young kid, and before you do anything, ask yourself that.
Okay. So are those the questions you asked with your fix and flip thought process?
Kind of, yeah. I mean, I was, I kind of got into real estate, exposed to real estate when I was 14 years old. I was working with a former pastor, retired pastor, doing one property a summer. And he just happened to be in my dad's office, and I was there messing around as a kid one day in the summer. He's like, "Hey, you want a summer job?" And I was like, "Sure." I didn't really know what I was getting myself into. Next thing you know, I was digging egress windows and, demolishing houses down to the studs, and couldn't even drive. My mom would have to bring me there with a lunchbox, and I was like, "Man, this is crazy." I actually learned a lot from that. Like plumbers would be like, "Man, stay in school, go." But I was like, but now we're seeing such a shortage of that, and I think that's just like terrible because. Like I quoted $700 to change a toilet last week. And I'm like, this is crazy. I can do it myself, but I just wanted to save a little bit of time and hassle. I'm not going to pay somebody that, but there's a shortage of it. So it's crazy to see.
I mean, you were talking earlier about some of the struggles with the reliability of labor and the cost of labor and the contractors and things like that to be able to build something.
It's an expensive place to live. My partner in Sowell House spent a formidable time in New York in his 20s as an entrepreneur, and he even will put this place up against New York from an entrepreneurial spirit and opportunity and all that. But from that, it's a very expensive place to live, and so it's very hard to find labor at the entry level into the workforce. And especially labor that you can count on,
So with that in mind, prices are higher than they've ever been. Rates are also high, 7s, 8s, depending on the product, versus, a couple years ago, it was half of that. And the opportunities to find value in this market, even if you find the value, and we've been talking about kind of renovations or fix and flips or buying and building from scratch, capital is high, the reliability of the labor force. In this environment, what are you seeing some of the best investors do or not do?
I think we're at kind of a pivotal moment. I've seen a lot of investors put the brakes on just to kind of see what happens, I guess you could say. They've got some projects that are coming out of the ground. Also, it depends on the scale too. Like if there's guys that are building 5,000 square foot houses that, they want to sell for $7-8 million and they've got they're into the dirt for $2 million and they got, a construction loan for, $3 million. They want to make sure they can sell that first before they go into their next project. And just now the time is normalized to where it used to be that, hey, it's kind of normal for a house to be on the market for a year here. When I first started, it was normal. Like you're like, hey, this is 300-400 days on the market. I know that sounds crazy, but like I said before, we don't sell shelter. We sell investments and discretionary income purchases. So I think that's, normal, and people just kind of have to find that balance. And I think that's where we're at right now. But then on the other hand, you've got smaller developers who are buying one-off lots, building, 2,500 to 3,000 square foot homes max with a private pool, really high quality house, and those things are still selling under 2 million. It just kind of depends where the market is looking. I mean, it's a lot easier to afford a house that's, $1.5 million or $2 million versus a $5 million house. I know that sounds crazy for me to even say, but that's just the average sales price in this area if you want to live here.
One of the things that I try to do for the people that I work with, I do work with a lot of investors. So I try to create as many relationships with property owners as possible so that there's a possibility that I can possibly find them off-market deals, because you never know what's happening in someone's life. And if I can help someone who needs to unload a property quickly off market, I'm trying to facilitate that. But what he's saying, it's a pivotal moment, but I think that we also need to pivot our strategies on what we can do to help people.
Can you expand on that a little bit?
Well, investors looking to invest as these prices, the listing prices are pretty high, based on a 5-year average. So if you can find something off market where someone needs to sell, then you're helping 2 people, right? Not just one person.
Mm-hmm. So off market may mean a better deal for a buyer if they can get it off market.
Oh, 100%. Okay. Yeah.
Okay. What about creative deal structure? Have you seen any type of sub 2 or people with no mortgage that maybe want to do a seller financing or a 3% rate they want to be able to offload?
Yeah.
Ton of seller finance right now. Yeah.
I don't like the sub 2 stuff.
Okay.
I had somebody approach it, and it just I think it puts the seller in a bad position as a second lien holder.
Yeah. It's not my favorite.
If something happens, they're in a second position mortgage. The first one's going to get paid back. Second's questionable. As far as seller financing, I think that's a great opportunity for somebody who wants to, maybe they're in their, later into life, they don't want to be running a lot. They don't want to pay a huge tax bill, but they also like the income, and you still have control of the property in a first position mortgage. I think
most of our people that have owned here for a long time that have a lot of confidence in this market are much more prone to be able to seller finance because they're not worried about what's going to happen in the next year or two or the election or any of that. So you typically have that opportunity a lot more with those that have been here for a while, whereas those that have come in the last 2 years, maybe it wasn't what they thought, much less prone to that process.
And they like the idea of, if something happens, they can still control the asset.
Most of my sellers that are offering the seller finance, they've owned for 5+ years and they're sitting on a ton of equity and they still want that price, that they could have gotten a year ago. So they're offering seller financing because at the end of the day, if they want this, at top market value, they're gonna have to incentivize a buyer and compete with the banks on the interest rates.
So let me just throw out an example. Let me see if I'm understanding this correctly. So let's say you got a sale price of $5 million. It's free and clear. So a buyer comes in with $2 million and they finance $3 million at like 3% rate, or like what's an example?
Probably like 6 to 8%, and that's probably on a 2 to 3 year balloon.
Yep.
Okay.
Okay. They're not signing 30-year notes to them.
Yeah, it's usually
they'll give them 24, 36
I did
months.
an interesting one recently where I think it was like a 5.5% interest rate. This wasn't recent, but this was when prime was, maybe it was 6. I can't remember, but it was in that 5 to 6 range. We did like a prepayment penalty and everything because we were giving him a little bit better interest rate. But if you look at the amortization schedule, he was actually making more money over time, and he's fine holding on to it or holding on to the note for that long period of time. So it really just kind of depends on what the seller's goal is.
So if somebody wants to do a seller financing creative deal structure in terms of the paperwork, it's different than the typical sales contract.
Yeah, we also become loan officers.
Okay.
The title company, for sure.
I'm just kidding. We're not licensed loan officers, but it's like, oh gosh, here we go.
Title.
Yeah.
So talking about the seller financing, I've got a guy who's actually talking to me about that for a condo and everything. So like you were saying, like a 2 to 3 year balloon payment, the guy wants to take 25% down. But then like for monthly payments, are you like finding out like what they owe, what they're paying monthly to, like, how do you figure that portion out?
Usually they can't do it if they have a mortgage on the property, because there's going to be something in their original loan document that's going to preclude them from being able to also finance on it. Okay. And then they wouldn't even have a first mortgage in that instance either. So if they already have a first mortgage, it becomes a lot more challenging to implement.
I don't think they do. I've just never done it before. And so like when trying to figure out like, okay, how much do we want to pay this person?
Yeah.
Put it in an amortization schedule.
You can do it a couple of different ways. Sometimes they'll do annual payments just to make things easy. It depends on how well the borrower at that point or buyer's been underwritten. But usually you just set it up and it's, a 3-year balloon and you say it's a 30-year amortized payment. Most of the time it's a 20 or 25 for that sense. But
okay. That's what I need. Thank you.
Yeah, so it'll pay that principal down a little bit over 2 years too, if they make all those payments on time.
Okay. Awesome. Thank you.
One of the things though with the seller financing is that, this is a vacation rental market. So it's got to be the seller needs to be incentivized because they could just hold on to it and keep making, $70K plus annually. Whereas, they're kind of challenging deals for sure.
Yeah, sometimes I call it a JOB, the property management side of things. You know, if they're tired of that and they just want to collect a fixed income, great. But you also want to make sure the borrower's strong too, and they're not doing this to 10 other houses. And
Yes.
you want to get a financial statement from them and have a good idea what their credit is. And
Credit reports
because
and
there's
attorneys.
guys that go around and they go get seller finance. You can get seller financing from 10 different 10 different houses and rent them out Airbnbs or whatever, and something happens. I mean, you want to be aware of that, and you want them to have enough skin in the game too. So I wouldn't do like no money down. Or,
Those are, I would even say, like, I see a lot of it advertised. I have very rarely seen them executed with agents involved. Usually at that level, it's a very savvy individual or somebody that's done a lot of real estate on both sides. Typically, they're not even using an agent. They're doing a back office deal, and they're all happy with it, and they do it. But I've advertised it. I don't see them executed that often.
You really got
I've done a few.
filter through them too, though.
Yes, you get a lot of crap and a lot of people that are unqualified, and it makes me so nervous. And I always try and warn my sellers, scare them, because they still have to go through a foreclosure process, which goes through the courts. So I try and do my best to discourage them from going that route. But I mean, at the end of the day, that's their decision, their property. I've done a few, but I've also seen some go south.
Yeah, it's so interesting because the internet's got all kinds of stuff, and you just don't know what's what anymore. And Pace Morby, big platform on YouTube and doing all these seminars, and I think he's got a seminar coming up later in this month maybe, or somebody does down in Orlando. But all the stuff that's on the internet, right? Sub to getting no money down. Yeah.
Well, I mean, just like in a lot of instances too, a lot of things that are fun to talk about and the things that are interesting are those that are a little bit different or something nuanced or new, kind of like the cost segmentation study. Most people even down here aren't utilizing those, right? There's a very small percentage of people who are actually executing that strategy and doing it well, but it's something that you should be aware of in case you come across it. So if you can get them feed points or tidbits and you get that opportunity and it's a good deal, everybody wins. Right. So it's all education. It's all great fonder. It's good to talk through too.
As an agent, you want to have a tool belt.
Yeah.
You want to have a lot of tools.
Kind of getting to the end of this, going into the next coming years, activities down in the markets, what do you do in the downtime? Right. I mean, there's only so much you can do in this environment to be able to find deals.
Call. Make calls.
Just keep on calling.
Calls till your ears bleed.
Okay.
Yeah. Like even if the market slows down, you better not slow down.
Okay.
Like your daily activities need to be going up a notch.
Okay.
Because it's like what Blake said earlier, it can change just in an instant. And like whoever had the most listings during the last COVID shutdown and then came out, they won big. And you never know, what opportunities are out there. So market share, get it.
That should be a tagline. Market share, get it.
Yeah. Oh man. Like Rachel said, I mean, it's easy to get dogged down on a bad market. You get dogged down, you're like, oh man, this is bad or whatnot. But if you stop moving, then you're not gonna be productive, right? So the best thing to do as many, big cold calls, do a little bit more open houses, meet as many people as you can. Just ask people, and just really, go back and touch all your past clients that you sold houses to, and just touch base with them, see how things are going.
Stay diligent. I mean,
you gotta stay on top of it.
What we're talking about is trying to time a market that no one can do. Yeah. And so if your business is predominantly built on trying to time the market, you've already lost the game, right? So you're helping people figure out when is right for them to purchase. It might be now, it might be 2 years from now, but if you just stay diligent, you don't have to do anything any different. Stay doing whatever got you here. Like you're talking to people who are consistent in whatever it is you're doing. Mm-hmm. You don't need to change what you're doing just because the market's slowing down or speeding up or any of that. Just keep doing what you're doing.
And stay innovative too. But don't get distracted by the shiny stuff.
Yes.
I love it. What's an example of shiny stuff right now?
Oh man, real estate is just, it's sticks and bricks. I mean, it's simple stuff. People always ask, what's the secret? It's like, Well, talking
Blocking and tackling.
Yeah. Talking to people.
How does Alabama always
calling
win?
people, you know,
they have
like-
a really good line.
Yeah.
It's not complicated.
Yeah. You know, there's always these new technologies and systems and softwares that come out that, you know, CRMs are going to change your life and they're going to run these new ads or something like that. It's a very small percentage of the business that comes from that.
So true.
That's the 80-20 rule. I mean, there's 20% of the agents doing 80% of the business, and they're good at talking with people, and they're good at making people feel good when you're around them. If you can just do those two things.
Another thing I have is the market knowledge. When you talk to people and you're knowledgeable about your market, it kind of has like a gravitational pull towards you. Like they're my client now because their fear of missing out, of not working with me. If that makes sense.
From a standpoint of a new agent getting in this market right now, all the stuff that's changing in the new laws with the commissions and whatnot, like, would you advise anybody to get into the market right now?
Always,
as an agent?
yes, and always no. Because there should always, I mean, you always want that hunger. You want that person that's pushing, that's going to, you know, pick up the clients I'm not touching well enough or whatever you're not doing well enough. Like you want that person pushing the ball forward always. But I feel like it's a much harder business to get into than when I did. But
I think it's the reason to come back and then be like, hey, what's your reason for getting into this business? Because if it's just for the money, it's not going to work. If it's for helping people and your passion is real estate, chances are it's probably going to work. Like my passion, I started working as a property manager in the summers and I was like seeing all these crazy houses being built and I was just loving going through them. And I was looking at the construction process and I was found the county records website and I was going through there. I'm like, who's buying this and who's building this? And
nerding out.
I was just biking around everywhere.
A good agent lives in the county records.
And
So
I was like, man, this is nuts. And so like, I was like, this is what I have to do. I have to monetize this knowledge. And so that's really, I think it all comes back to knowledge and really knowing your market.
Yeah, you have to be a little crazy, I think, you know, just a little obsessive or a little bit just maniacal about it. And it has to be your identity. So it's not a 9 to 5. It's not flexible.
It's half days.
You might work 100
Which
hours.
half of the day do you want to work? 12 to 12 or 12 to 12?
You might work 100 hours a week, but you're thinking about it 24/7.
Yeah, 100%. Building a team, Blake, who's the youngest? What's the age of the youngest person on your team?
Me? Yeah.
Okay.
Yeah.
Okay.
Gotcha.
Didn't expect that answer. Okay. Yeah, I mean, if you're 25 and you can somehow get into this industry right now and like not have to use this job to pay your bills, maybe you've got a spouse or other means to pay the bills besides this, there's not really a crop of people in the industry coming in, you know, as some of the other people could get out.
Well, it's like what you're saying is buying time. You need enough time to get enough at-bats with people, to have enough relationships to sell enough real estate. So if you can do like what you said, if you can buy yourself 2 to 3 years where you don't have to rely on that income, which is not easy to do, especially in today's world, then you got a good shot at making it.
Yeah, I love it.
Blueprint for me was, finding somebody that's experienced in the business and just learning everything that they do, just being around them. They're not going to pay you anything. And that was our conversation. He's like, hey, you can come here and you can be at the office, but I'm not going to pay you anything. Just learning from that, you know,
The phrases.
just the phrases, the language, how to talk to clients, everything, just going on showings, just those little opportunities. And then I would work at night, I was kind of embarrassed of it, but I was working at a restaurant for the first year.
Yeah.
While I was trying to get my first deal. And then I wanted it so bad, you just keep building off of that. And that's actually where I met the guy. Was the restaurant. So there's an old saying that my grandfather told me is your current job will always get you your next job. It's the truth.
I mean, the first job I got in the mortgage industry was in 2006. I was waiting tables at the Melting Pot. And I had a regular that would come in with their kids and report cards. And after a year of that, she's like, Joel, I'm going to get you a job. I'm like, okay, that's cool. It's going to be at Citibank. Show up for this day, this time for the interview. Okay, what am I doing? Mortgages. Okay, let's go.
Deal.
And got in, and the rest is history.
Yeah.
People who work in the service industry, I think, are made for this, though, because you have to be really good at reading people. You have to be able to multitask. You have to be, you're working on tips, right?
It'll create a social aspect in your life because you have to walk up to strangers and introduce yourself and get to know them
And be likable.
and be likable
Immediately.
and try and figure out what they're gonna like.
Exactly.
Yes. But I mean, I got in and I did something similar. I did join a team and learn as much as possible. And but there was definitely no exit strategy. It was sink or swim, do or die.
Yeah, you got to burn the cell.
Yeah, you had
No
to.
matter what you do, you gotta have to be so hungry, because it's like anything that's self-starter. It's just hard, and you're gonna get a lot of rejection, and things aren't gonna go your way. And if you don't have to keep doing it, and you have hey, I pull this emergency shoot and just go do that job, I'm gonna go do that.
You and I had a great conversation. I cold called you
Yes.
out of nowhere. You didn't know who the heck I was.
You were so good.
And I remember that phone call so much because I basically packed up my computer, was getting ready to walk out the door. I'm like, I'm doing one more call.
Yes.
And it worked
Yeah.
out, and we had a great conversation. It was a lot of fun. I'm glad to meet you. But like, that's that one little bitty thing.
10%.
Yes.
Yeah.
One more.
Sometimes that's enough to like
Oh, it's
keep it
everything.
going.
I can vouch for that completely. That's sometimes that one more call. That's going to be the one.
Yep.
That's what keeps me going every day.
Well, thank you so much for taking this much time out of your busy days and weeks. It's going to be a whirlwind rest of the year, 2025. What are the people saying now? Survive till 25 is what I keep hearing.
Oh, really?
Yeah.
Let's just get through the election and into next year. Let's just forget it ever happened.
Right. So I think it'll be interesting to see kind of what we see coming into 25, as so much will probably change from now to then anyway. But thank you guys so much.
Thank you.
A lot of fun.
Thank you for having us.
Thank
It
you.
was a lot of fun.
Yeah, can't wait to get the footage out there and rock and roll.
Awesome.
All right.
Thanks, Joel.
Thanks, Joel.
That's a wrap.